Recently, the hedge fund Himalaya Capital, founded by Li Lu, who is the very one who introduced BYD to Charlie Munger and Warren Buffett, reduced its holdings of BYD. And if you want to know why he sold and who else recently sold BYD shares and what that means for you as an investor and if you should sell as well, then you should definitely stick around. Hi folks, and welcome back to my channel. I am Björn for those who don't know me, and nice to meet you. And while I was in holidays the last 2 weeks, a lot of things happened. Himalaya Capital, a US-based investment management firm, has trimmed its stakes in the Chinese electric vehicle maker BYD company. So let's have a short look. Who is Himalaya Capital and why is that important? The founder and the chairman of Himalaya Capital, Li Lu, is a Chinese-born American. Li Lu invested in BYD as early as 2002 and who gained fame for introducing Warren Buffett and Charlie Munger of Berkshire Hathaway to BYD. And by the way, Berkshire Hathaway still staying the course with its latest reported holding of 225 million H shares, acquired during the global financial crisis in 2008 for about 230 million US dollars, and fun fact, now it's worth 6.2 billion. However, Li Lu sold BYD H shares in 2 successive blocks 3 weeks ago, pocketing about 2.5 billion Hong Kong dollars, which is roughly around about 340 million US dollars. But don't panic just yet. I will explain later on why that does not really matter. Okay? Hence, the fund sold more than 3.63 million H shares at an average price of 224.20 Hong Kong dollars each on Friday the 9th of July. After offloading 7.14 million shares a day earlier at the price of 227.60 Hong Kong dollars. BYD shares fell 2.4% in Hong Kong on the July 8th and another 1.6% to 216.20 on the July 9th when the transaction took place, but recovered already the following Monday, and we are now in a sideways trend. And by the way, Li Lu was not the only one who sold BYD shares. No, executive Jia Zhuguang sold a combined 7.7 million A shares between July 7th and July 9th as well. So, but why all this does not really matter? Well, even if Li Lu sold some shares, I would be happy to have 1% of it, to be honest. The sales reduced his stake to 6% from 7.03% at the start of the year, and Jia Zhuguang's long position in BYD falls to 4.69% from 5.12%. So you can see it is not really dramatic, but now the bearing question, why they did it? Nobody can say why. But my guess here is, as Li Lu is a value investor, same as Warren Buffett and Charlie Munger, therefore the only reason to sell a stock when it's making profit and it's not crashing is A, if the stock is highly overvalued, which I, by the way, made a video to it and explained exactly when you should sell a stock, and I will link the video to it at the end of this one. So to understand fully Li Lu's approach, I recommend you to check it out. Or B, if a portfolio is unbalanced, means you would have too many China risk stocks inside or too many from the same industry or sector. But for Li Lu, that isn't the case here. Therefore, I strongly believe that he sold some shares to take the profit and to reinvest it, which I did as well before him, as I sold part of my BYD shares on the 1st of July at the price of 29.70 US dollars and opened a position with my money at PaySafe. If that was a good idea, time will tell. So, to sum this up, don't panic, BYD has still a lot of potential, and my expected price target is between 35 to 38 US dollars. As BYD is looking to expand passenger EV sales overseas, it announced in May that 1,510 EVs would be shipped to Norway within this year. In February 2021, it signed an agreement with Australian customer Nextport to ship passengers EVs there, and it continues to chip away at the global market for electric buses. So it delivered 43 electric buses to Finland last month. For instance, in the US, BYD's California electric bus plant employs about 800 people. Another point is that BYD's overall costs are likely to be lower than from the rivals due to its in-house component strength, and Wang, the CEO of BYD, has another advantage that his current round of upstart Chinese rivals don't: long experience. As Wang stated, the market is like a battlefield and competition a war. Wang said of business leadership in the cutthroat EV market: generals play a crucial role. This requires entrepreneurs to play a leading role, he said. Other requirements for success, Wang suggested: dare to pioneer innovation and persevere and never capitulate. Such dependability is a vital part of entrepreneurship. And last but not least, Wang said entrepreneurs should stay focused on what they are doing in their leading roles. They must do more and talk less. Given a leader with those skills, Wang added, a successful company must fully grasp key technologies, implement accurate strategies, and possesses a mechanism for speedy decision making. The wrong strategy may be the worst mistake of all. However, if the strategy direction is wrong, 5 years may be wasted and nobody can buy time, Wang said. Therefore, once refusing to sell batteries to other companies, BYD has since reversed its decision and started cooperation relationships with various car makers to gain a piece of Chinese fast-growing EV market. It is also making efforts to launch cheaper models for budget-conscious buyers. Hence, don't expect long-term thinker Wang to fail to have a direction he wants to go. So, what do you guys think about Wang's statement and the future of BYD? Let me know in the comments below. And before I forget it, feel free to follow me on Instagram. There you can get in touch with me, and I post frequently some personal stuff and for sure financial updates. That's it for today. I hope you liked the video. Thanks for watching, and as promised, here the video when to sell stocks. Enjoy. And as always, stay focused and don't get greedy. See you all next time.